But I've heard this argument also from BTIG's Julian Emmanuel. He shares your view that the bar is a whole lot higher for big tech and a whole lot lower for the cyclical areas of the market. Is an earnings beat and playing the expectations game the right way to play this over the medium term?
Yeah, look, I think last week we saw the first of the big FANG names really report, and that was Netflix, and they had a phenomenal quarter. Of course, their outlook was a little softer, and they got hit on that. That compares to some of the other, call it non-tech reopening stories where markets are giving those names so far a little bit more of a pass. Now, keep in mind, and we heard from Bob Dole this morning, Netflix valuation of the FANGs, for example, is quite a bit more extreme. We will get this week. Microsoft will get next week. Amazon, Google, Facebook. So all the big large cap tech names that we've all been watching due to report in the next couple of weeks. What I will say, last week's dip in tech, where we did see the reopening story once again, very short-lived, outperform. What we saw after that was buyers started to come in, and that buy the dip mentality came back to life. And, that's probably driven by some technical factors as well, including the fact that there is still elevated cash on the sideline. There are still players, particularly institutional players, that haven't participated in this 40% plus rally now. And so it gave us a little bit of an inkling of what might happen if we do get another dip in large cap tech. So something to keep in mind as we move forward over the next few weeks.
Mona, this is really important, this point about this sector still being somewhat under-owned. When we get the fund manager survey from Bank of America, pretty much month after month it says this is the most crowded trade, long US tech. Mm-hmm. Are you convinced, though, that we've seen the capitulation?
Generally our view is that in order for the S&P to really have a sustained rally, you need to broaden this participation. You need to see some of these beaten up cyclical reopening names start to participate. However, we're not sure if that sustained participation from the reopening sector happens yet. It will probably need a catalyst such as perhaps a vaccine, but not only a vaccine, a sustainable plan for a vaccine, manufacturing, distribution, et cetera. Or we'll have to see better health results. And clearly, we have not yet seen a sustained downturn in some of the hot spots we're seeing, of course, in states like California, Florida, Arizona, et cetera. And so I think we need to see those. If you look at the last 10 years, for example, value has only outperformed growth about 4 times in a sustainable way. But during those 4 times, that outperformance lasted about 6 to 12 months. So for that to happen, we think we need some really better fundamentals. Until then, I do think this, stay-at-home tech story, secular growth in a low-rate environment will continue to perform, and we'll continue to see buyers on dips.
That's the difference between the call for the rotation now and the rotation that we started to see going into early June. That the rotation going into early June actually had the data to back it up. We reopened, had a series of upside positive surprises. The point that you're making, Mona, is that the data is about to test us. We're about to see the economy essentially stall out and see it right before our eyes in the hard data for things like the jobs report that we could expect in the next coming months as well. And with that in mind, Mona, do we need to see these earnings from these tech players to really break down on a sustainable basis? We need to prove that they are still vulnerable to cyclical headwinds, because so far we haven't seen that over the last several months. Do you expect they will be tested?
Yeah, I do think we'll get another period of some sort of consolidation in these names. There has to be some profit taking that occurs along the way. And typically earnings tends to be a period that, you can sell the news, et cetera, take the profits. Perhaps the best is behind you in some cases. For tech, it's not only a 1-year theme, 3-year theme, it's really a 5 and 10-year long-term, secular growth theme in some of these areas like, cloud computing or cybersecurity or even the 5G that's just evolving now. And so it's harder to call, a complete rollover in the sector. What we will expect, though, are periods of consolidation. And particularly, as we see the broadening of this rally, there may be a rotation out of some of the large cap techs into some of the cyclical players. But to your point, the data thus far doesn't support that. And that 4-week or so rally we saw in the cyclicals from mid-May to mid-June was really at the peak reopening. Since then, we've seen some states pause their reopening. We've seen some some shutdowns and pullbacks in the reopening, and that may start to get reflected in the economic metrics like the July jobs report, or even, some forms of retail sales, consumer confidence. We may start to see a little bit of softening, but longer term, we continue to believe in the reopening of the economy, and that may come, either through a vaccine or just through better health trends overall. That will drive the cyclical story.